right, let's do it. Welcome to Wall Street Beats, everybody. I'm Steve Lamar. We've got a short crew today. Down a man, but we're going to go anyway. Joined by David Maris, our healthcare and biotech pro, and our resident Japanese stocks expert. He dabbles on the side, and you can see that smile on his face. Might indicate what happened in the Nikkei markets overnight. What were they up, like 4% or so, David? That was a hell of a rip. And what else are we going to talk about? I hope everybody enjoyed the Super Bowl. Our team won. I should say the West Coast team won. My team wasn't there, but anyway, the honor. But it was fun to watch. Did you have a favorite Super Bowl commercial, David?
I was wondering.
In the game.
I was wondering. Actually, I think the Manscaped one was actually very funny. That one was actually very funny. I think the Budweiser ones were great.
Yeah,
Dunkin' Donuts one,
Dunkin' Donuts.
I think. Yeah, it was a little too confusing. I got what they were going for. But I was really waiting to see if HIMS and Hers would do their Super Bowl ad because of the news that happened over the weekend. And so here we are in the fourth quarter. I'm like, okay, maybe they just pulled it. They're just like, you know what? Let's not anger anybody else. Who knows who'll sue us next? But sure enough, they came up late in the fourth quarter. So.
It was a good commercial. I thought it was well done.
I think so
cheeky,
too.
But it was good.
Yeah, it was a great emotional ad. Now, unfortunately, the call to action is a little weird, right? Because it's we hate rich people are healthier, let's go beat up rich people. And there's no good answer. And then if you say what the message is, democratizing healthcare, which is, I even emailed them once and said, you should talk about the health disparities between, you're making it easier. If you have two jobs, or even if you have one job, getting to a doctor for something simple is hard. So HIMS could fit a really important niche. The unfortunate part, and I think that's what they're building, right? So 6 months ago, a year ago, I think people were saying, look, they're an ED company, or they're a hair loss ED company. Then they started doing some women's health, and they were doing more, and they were building it out. But to really be someone's doctor, you need to have, and people who have concierge doctors know this, you can email them whenever and say, hey, I can't hear out of one ear. And they'll tell you, is it painful?
Probably should go to the doctor.
Okay. Yeah, maybe go see the ER. So you can get handheld. And that's true. People who have money can do that, and others don't have those resources. They panic. They can't reach their doctor. They end up using expensive things like the emergency room. But right now, HIMS can't answer that, right? They can't do that for people. They can do a lot of stuff, but they can't do that. And that's where the ad is a little bit of great for brand awareness, great to tell people what they're doing, great for if you want weight loss drugs or some other simple things, ED medicines, but not great if you're a new mom or new parents and you're like, I think I want to have a pediatrician on call all the time. That's not what this isn't going to help you. But it wasn't.
I liked the message. I got a new message from them this time that I hadn't seen before, and them going after. There's a lot of tangential businesses around the edges, testing your blood for one thing or another. Do you have a supplement deficiency? Do you want to get screened for cancer? Those sorts of things. I didn't know they were that active in that. And I think that there's a lot of businesses out there like 10X Genomics and others that are doing that very successfully. So it's nice. That sounded like those sounded like obvious markets for them to get into given their customer base.
Yeah. And I think that's a so much better business, by the way. And even just interpreting results. You may need a quarterback just to interpret the results, but maybe any medicine, anything beyond that, maybe you need to see a specialist. So I talked to a hedge fund manager over the weekend who was upset because they were short HIMS for a long time, and then they weren't short during the last few days. And they're saying they want to explain that to their investors. And I said, well, yeah, it's easy. You were short for fundamental reasons. You got your face ripped off. You didn't for risk purposes. But one of the things that you brought up and we were talking about is what you just brought up. LabCorp and Quest have to be, I don't want to say the dumbest business managers around, but if you think about it, you have a duopoly. If you told me you have to go get a lab test and you can't get it from those two folks, I'd be like, okay, then you're dying because I don't even know who else does those tests. It's LabCorp and Quest. Meanwhile, they have razor thin margins, and you've never seen an ad like the HIMS one for LabCorp or Quest because they don't want to get doctors and the medical establishment too worked up that they're trying to force unnecessary tests on people. But anyone can go get any test they want. So it should be, that would be a great ad for them to run. LabCorp, hey, you want to know your cholesterol? Who cares if you talk to a doctor? Talk to us. I would be like, oh,
Yeah.
okay, that's pretty good. They don't do that though. So we'll
Yep.
put that aside and just be, that's shrapnel to my comments on HIMS.
But what an opportunity lost. Holy crap. Completely missed the boat.
And so HIMS is doing that and saying, look, we can test for a lot of things. And they have a relationship with Grail, which does a lot of cancer screenings. And I think that part of it is very smart. And I had said last week, I don't want to so much comment this was last week. I'm happy to do it today if you want to talk about it. I think they're a good business, and I think they're building out what will be a good business. But what they have to do is really hard to do. So I talked about how difficult it is just if you want regular advice on something. They have different silos. They're not covering the whole waterfront. So what they have to do is build that out, and that's really hard to do and expensive to do. So they're in that phase. And while they were in that phase, the GLP-1s come out and they ride that wave. And that was great for them. And then it became more complicated because the pricing started dropping. And the two big manufacturers were fine with them at first, taking a little bit of share. But as they were starting to have an impact and get a lot of press, they were like, hey, we're going to cause problems for you. Those two companies signed a deal with the administration of, hey, don't beat up on us anymore. We're going to open a whole bunch of factories here. We're going to give you super duper pricing on Medicare for weight loss drugs. Leave us alone. And the administration said, great, we will cover $25, I think it is, or $199 weight loss drugs for Medicare sometime in the next year. Okay, it's great. They have a deal. But what kind of deal what does that get you? I'm not saying that it's protection money, but it could be. Because over the weekend, on Friday, the FDA, the FDA puts out and says, hey, listen, we told you before what you were doing wasn't cool. Now we're going to send this to the Department of Justice. And what's interesting about the press release, if I recall it correctly, it says compounding drugs. It doesn't say the pills. It doesn't specify that we're just mad at you for doing the pills. Because the oral medication came out and HIMS said, we're going to also do the oral medication. It was the day that they said they were going to do the oral medications that Novo Nordisk said, hey, we're going to sue you. It was that same day or the day after that the FDA said, we're sending this to the Department of Justice. It was the day after that, so Saturday, I think, it might have been Sunday, it doesn't matter, that HIMS came out and said, by the way, we're not doing the pill anymore.
Wow.
Now, so this friend of mine who called, he said, walk me through, you used to be a public company board member, not for this company, but how does the board do this? And I said, they have two classes of shares. So there's one person that runs the board, but the board, I've been in situations where a company says, the company management says, no one is more aligned than we are because we own X amount of stock. I'm telling you, we need to do bold things. We need to do this pill. In addition, if we get sued, we fight it. And if we lose, we'll know from then on that we can't do it. But if we win, it's game over. Look at us. And I could see as a board member going, now I wouldn't. I'd be like, hey, that's super risky. I don't know if I want to do that. But hearing that argument, I could see someone, a reasonable person, not someone in the pocket of management. I could see a reasonable board member going, you know what, that's true. We don't know the law. It's weird. It allows for personalization. Let's do this. Let's come to the conclusion. And they still may do that, but
so David, sure. For those not as close to this as most people, or for those not as close as you, explain to us what's the controversy around the pill? Why is it on again, off again? Why would they be sued for this?
Yeah, so the pill is actually, it's interesting in a few different ways. So first of all, Novo Nordisk has this, we'll call it fat technology. It's liposomal, which is like a fancy word for kind of fat. But so that In order to take this pill, you have to take it every day. The injection's once a week. Why is that? When you inject something, it's available to your body much faster. It doesn't go through your stomach, which is a really harsh environment that breaks everything down. So they have to give you 10 times as much drug in the pill than you would with an injection. But it's 10 times every day. So you're having really 70 times more. I'm doing this. If somebody's listening and my math is off, but you have to have a lot more orally. Now, the side effects aren't 10 times as worse or anything like that. It balances itself out because the stomach degrades enough, but enough gets through. So if you're going to compound that without that technology, some people have come out and said a compounded pill probably wouldn't even work. And since it hasn't been FDA approved, you would have no real way of knowing. Now, you would know in 3 months, 4 months, when nobody's using this pill anymore from HIMS that, okay, this is really not working.
Speaks for itself. It's not working.
But I think Novo's point of this could be unsafe or not effective is a fair one on that technology. Now, maybe HIMS was using a different technology that does the same thing. I don't know. I'm not close enough to that part of it. Okay, that said, you have a brand new drug that just got approved last month. So it's just been on the market for a month. And they're saying, okay, we're going to give you a compounded version of this. The idea, so Novo's thing, I haven't seen the complaint. I've only seen the press release. They talk about mass customization, that you're not allowed to do mass customization. And that's a good question, actually, because I think actually you're allowed to do mass customization. So what I mean is,
in an oral or in an injector?
In any product. So here's the thing. The FDA rules allow for, if say you're taking a drug and you have a weird side effect, and it just happens to be that you're super sensitive to, you get super nauseous on it. So the doctor says, there's a drug that helps with anti-nausea. What we're going to do is we're going to compound the drug that you're on plus Zofran, which is a drug that helps you not be nauseous. You know what, we're going to do that just for you. And I say just for you, I'm going to do it based on your profile. Sue comes in the next day or that same day, and she has the same problem. I say, you know what, I'm going to do that same thing for you. Now I do that at scale. That's mass customization. Am I doing it for every individual person? Yes. Novo is making the case that no, you're not doing it for every single person. You're just offering pills that aren't customized for every individual person. You're just offering these pills. It's interesting because the law isn't clear, and where it really matters is for like oncology drugs that are done for individual patients, or fertility drugs that are done for individual. This was meant to be something that allows doctors and hospitals to figure out what's best for the patient. But you're using either a loophole or the opportunity, it depends on whether you want to be harsh to them or not. You're using the existing law, the way it's written, to help people. That would be HIMS thing. Like, well, that's what we're doing. Others would argue what I mentioned. So the pill comes out and they say, hey, we have the pill. Novo's not going to have that. And then the government says, yeah, you're not going to have that. Now, what happened to the stock? So the stock first was up when they announced we're going to do a pill. Then later that day, it was flat when Novo said, hey, we're probably going to sue you, or we're going to sue you. And then when the FDA stuff came out, it dropped about 20%. Now today it's down 25%. So 20% was pre-market. Let's just see where it is now. Yeah, down 26%. So this friend of mine and big healthcare manager says, hey, where do you think the stock's going to go? I don't know. I mean, it's hard on a valuation basis because it's trading on a story basis. It's not on a valuation basis. And so I said, I don't know, maybe 15. He goes, I think it's going to be 9. I go, okay, you're asking me, but you have something in your mind. I have no idea. But if you think about, they did $700 million of EBITDA. Let's say, sorry, they did $78 million of EBITDA in the third quarter. So let's say that's 70 normalized. And then you take away some of I don't know, are you taking away all of GLP-1s? Are you not? That's why I say you can't do the valuation, because I don't know if that $70 million of EBITDA was half of it GLP-1s. When I got involved in it, it was like $15.
Have they never broken that out, David?
No, they've never broken it out. And there's no good way of figuring it out because they're so early in the launch, you don't know what they're spending on it.
Yeah.
So I think of it as if you tried to do a multiple of sales and you said the problem is that they're almost like a wholesaler, that their sales aren't just their revenue, it's also drug cost and all the rest. So you can't, it's hard to do that even. But if you said $70 million of EBITDA and you wanted to give them, what multiple do you, so that's 280, right, for the year. You're going to give them a 10 multiple on that? That seems a little high. It's a high growth company, so that's great. But so if you do that and you said you're at 2.8 billion, you're still a billion lower than where the stock is today. So you're still like 20, 25% lower. So I think it does stabilize like somewhere here, and then there's no one who wants to buy it and it drifts kind of lower. And then all depends on what quarter they put up and what do they say on the quarter. Like, right? If I told you we're going to buy this whole business, Steve, you and I were going to buy it, and you'd say, okay, I need to know some things like how profitable are they without this business? Okay, I can't tell you that. I want to know
that's what the whole call is going to be about.
Yeah, what is their last? What's the quarter they're in? HIMS House, which we've had on our show, they do a great job in tracking credit card data, web traffic data, all the things that I used to do on my own. They do now automatically, so they kind of save all that legwork. And
what's HIMS House, David? Just for people that don't know, it's a community on Twitter.
Yeah, it's a community on Twitter. They also have a subscription, and they also have a Discord, and they only talk about HIMS and HERS. They talk about some other stocks here and there, but their focus, because it's HIMS House, is on HIMS and HERS. And it's a very intelligent community, more or less. Obviously, with any stock group, you're going to have doofuses who will make some inappropriate comments or be like, you'd have to own it. You have to own it. It's $70. It's going to the 80. And then at 17, you have to own it. Or this, or the short side saying the opposite. You have some of that, but a lot of people are really concerned of, hey, and the chatter lately has been, the data doesn't look great going into this quarter. And so I subscribe, and I mentioned, I don't really post there because we have here, but I posted to our subscribers the same thing I posted there, which is, and before this negative news, I said, the reason the stock's been down going into the quarter is all the data looks bad. You had Doximity report a not so great guidance, and that stock I think was down 50% in a day. They're another telemedicine company. You have a race to the bottom on pricing for the GLP-1s. Before they were $2,500, now you can get it for $199. It's hard if you're compounding. You were skimming at a really great price, and now all of a sudden you have competitors that are pretty cheap, and soon you'll have Medicare. Okay, you have a stock that's down, and that sounds so obvious, but if you're a momentum stock player and you're playing on a trade on a company that's been beating earnings, if the data doesn't look great and your stock's underperforming and you're a portfolio manager, you generally say, you're yelling at your analyst. You're saying, why do we own this? This is, by the way, this is a call that I didn't get that often.
This is a call you've gotten. This is a call you've gotten in the last few weeks.
But I've heard
why do I own
things.
this, Maris? Why?
Yeah, why do I own this? And you go, you have a choice as an analyst. Either go, you're right, we should get out. Which it looks like that's what a lot of those conversations.
That's what's happening today.
Or you fight it and you say, no, we have to make a stand, and you're Fidelity or you're someone, and you make that stand. Guess what? You're fired at this point. Down 25%, and you made that stand. That's not that big of a market cap company, so maybe you're not fired. It's not like you're overweight GE and it falls apart or something. But it's still not great. You're definitely in a penalty box. You may be fired, but 25% in a day after a stock's been down from 70 is pretty bad.
All right, so what do we do with it here? What do we do with it here?
So
just wait and watch?
Yeah, that's what I'm going to do. And I said that last week when you asked the question, and sometimes you sit on your hands and it's the right thing to do. Sometimes it's wrong. If you said to me, you had a crystal ball and next week the stock's $20, what's the possibility of that? I'd be like, yeah, that's complete. For this volatile stock, completely reasonable. Stock went down 25%. It picks up a bit. Do I think that's likely? No. If I thought that were likely, then I'd buy the stock. I'm tempted to buy a little, like down 25%, but I'm not. I'm just going to say, you know what? I'm going to be data driven. I did that and was very lucky before. When I say I did that, I played the momentum game of, hey, they've caught a tiger by the tail with the GLP-1s, and they're a good business. We did that all of last year and the year before a bit, and we traded it really well, knock on wood. Do I want to risk it now? Again, 17. This is pretty interesting because it's close to
no, I remember the last time it was 17, like 18 months or 2 years ago. I mean, it was, it's had a run.
And you go back to this idea that they're building something that's important. And I think if they can do it, it'll be great. Unfortunately, it's super expensive to do what they're doing. And it's really hard. So you might have a bunch of quarters that are ups and downs as they start to do these lab tests. How sensitive are they to advertising? Do we have to spend more? The rest. But again, I think they're doing the right things. I mean, this oral thing aside, but so
all right.
Tempted,
so follow us in the chat behind the paywall, and you'll see when David gets off his hands and actually starts to nibble. Will you tell us when you're when you start thinking about it?
Absolutely, and you can tell I'm down.
I know you're chomping at the bit right now. I could tell.
And then I'm doing what a lot of other people are doing too, which is they look at this and they go, okay, we opened down 26%. We're down. We're at 17. We're bouncing around here. Has it stabilized? Whatever. Remember, or I should always remind myself, the first trades at 10 o'clock, whatever, that's great. But not everyone can sell their holdings at 10 o'clock or between 9:30 and 10 o'clock. So what might happen, it takes time. And so you might miss some trading here and there, but I'm not a day trader. I like what they're doing long term. I really do. Do I think that they've made some they look like mistakes that I think could have been avoided? But that's easy, right? That's like we were talking about football before the show. It's like football, like a Monday morning quarterback. You could say that, but those conversations that I mentioned about the board, I could, like I said, reasonable people could say, let's go for it.
Yeah.
Reasonable people also lost 26% today.
There's some advertising value to that too. If this starts to really heat up, people will be saying, what? Novo Nordisk is going after, who's this little company, HIMS and HERS? What is this all about?
Yeah. Novo was smart though, because they needed to help themselves also. They needed to show a backbone, and they have the lawyers to pay for it.
Sure. All right.
That's the other side of the trade, which is, should you be long Novo? Should you be long Lilly? And I do Novo down here. I'm just not getting involved with this
battle.
Yeah, it's again, and they're guiding to lower revenue for 2026 than 2025. And I don't know if I want to own that dynamic.
Yeah, that's
super cheap.
That's not ideal. Yeah. Cheap, but there's a reason it's cheap. There's a reason this one's cheap.
Yep.
All right, can we talk some Japanese stocks after this big move overnight? Did you do anything with all these, with your basket?
No, so I did.
Have you shrunk your basket? Is it still 20-ish stocks? We haven't talked about this.
Yeah, so I posted to the chat today, to the subscriber chat, the actual portfolio. And you can see yesterday's gain and then the total gain and loss. I do want to say there's one in this list, just because I didn't take the time to sort it correctly. The Cletus, which is a pharma company that's up 64% since I did this. I actually own that. I own that beforehand. So we take that one out of the mix. But you can see most of them had the hit ratio is pretty good. There are only 3 that are down. Of course, they're down big. This is $1, and also a Kiso, the other one that's down 34%. I've owned for a while. So there's only 2 down out of the 20, and they're all, it's equal. It started off as an equal dollar weight. I'm not adjusting it, trading around it to keep it an equal dollar weight. I'm going to let it go.
You're not rebalancing it. You're not doing any of that.
No, because this is only a few percentage points of the overall portfolio, and it's a sleeve. And I mentioned in the chat that I do own other Japanese stocks that aren't part of this trading idea. This trading idea was, I want to own strengthening yen companies. Now, not all of them are, Now, Kewpie, which is probably my favorite one out of this whole group, not because of its potential for appreciation, but because of what they make. Kewpie makes mayonnaise. They make yolks only mayonnaise. So they don't use the whole egg, they use the yolks. So you can't get a better tasting mayonnaise. Now, mayonnaise hasn't been a hot market given the GLP-1s, to say the least.
I was going to say, there's your head.
Exactly. But it has been they've been expanding into the US. So you can actually find this Japanese mayonnaise in most grocery stores now. It's tucked in there, but it's worth trying. I will tell you from firsthand experience. But those are the kind of companies. So there are a few generic companies in here. And again, the idea is that the input costs would be cheaper and they're selling domestically. So that's how you get some of these pharma companies and some of these generic companies and some baking companies. So Ajinomoto makes spices. Obviously a really big drug company. I say that like people, Shugai.
So this isn't a fly by the seat of your pants risk. It sounds like there's some nice staples in here. There's some pharma in here. There's some.
Yeah. So what I did is I looked at companies that are growing, that have mostly domestic exposure. There are a few that aren't, like Toyota, that is, as a hedge to this.
Yep.
By the way, that tends to go up with the Japanese market anyway, not just a strengthening yen or a weakening yen. It's
indexed.
Companies that are growing that don't have tremendous debt. So I wanted to have healthy companies otherwise. Unlike an index that's usually market cap weighted, I find building these your own, if you spend the time, if you do this for a living and you can spend the time looking at the quality of the companies, if you then diversify to 20, you have market exposure to a better basket, like more direct to the theme than just saying, I could buy a Japanese index fund and trade that all day long, in and out super fast. If I wanted to trade this in and out, I have to do 20 different transactions.
Right. Yeah. Hard to trade around a book with that many names.
But I'm keeping this. I'm not doing anything to it. I like the Japanese exposure going forward. The reason the market did so well yesterday is that they had a snap election. Everything looked fine. There was no turmoil. And lack of turmoil is actually good. So I'd like more of that personally and in our own markets.
And politically here in the U.S. would be nice. All right, let's wrap it up there. You guys got a treat today with David talking HIMS and his Japanese stocks, which you can find behind our paywall at wallstreetbeats.com. We have a private chat where all the pros talk to one another, share their ideas, triangulate information in real time with one another. So that in and of itself is wickedly valuable with this group of guys and gals. So thanks for joining us. Thank you, David. That was fantastic overview on HIMS. We will be back here tomorrow. Any closing thoughts?
No, not really. Not really.
Okay.
I'm excited to start the week. Jury duty later this week.
Happy
Woo!
Monday. Jury duty. Yeah. Good luck with that. All right. Thanks for joining us. Follow us on wallstreetbeats.com, and we will see you back here tomorrow. Thank you, David. Thank you,
Thanks,
Jen.
Steve. Thanks, Jen.